Hey everyone, this is Todd Wheatley, owner of Heartfelt Homes, real estate investment company based out of Watertown, Massachusetts. Just wanted to give a quick end of week update on two quick projects we have going on. For some of those that we talked to directly, you know about these two, and how we've been impacted by the ongoing COVID-19 pandemic, particularly on the lending space. So first and foremost, we have a 6-unit apartment building that we're trying to close on down in Cincinnati, Ohio. We had this under contract in the beginning of March, and obviously things have changed significantly since then. And what we're finding is on the commercial side, on the commercial lending space, we're seeing pretty significant changes to what we were originally quoted for things like down payment, interest rate, amortization tables, et cetera. And so we've had to get creative to keep this deal moving forward. In particular, we're evaluating bringing in potential partners to take the deal down and keep the capital outlay closer to where we thought it would originally be, and allow for us to still have money to renovate units the way they need to be renovated and ultimately add value to the 6-unit apartment building, and which is a straight up value add play. And so just to get specific on how the lending has been impacted in the commercial space for us, what we originally thought would be 20% down payment, 25-year amortization schedule, and about 4% interest rate on a 10-1 ARM has now changed, and this has been even difficult to find this, has been no less than 25% down, a 5-1 ARM at 3.75%, and on 20-year amortization schedule. So you can, if you do the quick math, you can see on a roughly $400,000 building, you can see that the initial cash outlay is considerably bigger, and then that 5-1 ARM adds some challenges as well. Because it's a short-term 2 to 3 year value add play on that building, we're not super worried about the ARM in particular. The additional cash down obviously changes things, because on a value add building, you want to make sure you have capital to then reinvest in the building and turn the units over nicely, and put in tenants, lease up tenants that you're looking for, and be able to push that market rent up. So that's how we've been impacted down there. We still think we can keep the deal alive. We're trying to bring in a potential partner, equity partner, so we can spread that risk out, spread the capital outlay out a little bit, and still do the nice high quality renovation job that we know we can do. So that's Cincinnati. I guess while we're in Cincinnati, our two single family properties down there have leased up nicely. One is getting turned over right now. One we actually have a tenant moving in tomorrow. So we haven't seen a slowdown in applications or rental interest in that market anyway. We're actually seeing application rates and interest in our single family rental residents stay about the same. And then up in Boston, we are trying to close on a 4-family house hack in the city of Waltham. And we are using, and I know folks are going to cringe, but we're trying to use an FHA loan to take this building down. It's a very expensive product, and on a 4-family just around Boston, obviously with a larger loan amount, that can mean some pretty significant mortgage insurance and an upfront payment as well. However, the building will still cash flow very nicely with us living in it. And because of the significant rent support, even with an expensive loan like an FHA loan, and what that'll do is that'll allow us to reserve a lot of capital to reinvest in this building as well. Units are of average quality, rents are below market. And so if we are able to live in the building, significantly reduce our living expenses, and then reserve that capital and turn the units over and do a really nice renovation on these units, we can drive rents up by like 25% across the building, which obviously will have a significant impact on NOI and will improve our cash flow significantly. With the FHA lending, which is a residential product, we are seeing a little bit of a tightening on underwriting requirements with regards to self-sufficiency and what the building's bringing in for current rent, and how the appraisers what the appraisers are comfortable with supporting for market rents. And because of that, we're not seeing kind of a shoe in 3.5-5% down payment. We're kind of working through what that's going to look like, but it's going to mean kind of a larger out of pocket down payment in order to still secure the loan. And obviously you have to weigh the pros and cons of an FHA loan if you're putting down a bigger down payment, because that's not really the point. But it's an interesting time to be buying some properties. It's an interesting time to be going through both residential lending and commercial lending and seeing the impact of COVID-19 on lending restrictions and how things are tightening up. Luckily, we have rock star teams in both Cincinnati and Boston that are helping us navigate this, both on the lending side as well as our agents and property managers. So we feel like we're in a good position to continue moving forward and closing on both of these properties. But thought it was worthwhile to give a quick update for anybody that is either thinking about moving forward on a commercial or residential property, or otherwise looking at using some lending. Just go into it knowing that what was true a month ago, with down payment requirements and certain underwriting requirements, have significantly changed. So just go in expecting that. So with that, that's our end of week update. That's what we have going on at Heartfelt Homes. We're always keeping an eye on keeping an eye out for fix and flip properties. We are backing off that a little bit until this blows over, just not knowing what the real estate market's going to do throughout the summer, but always kind of looking around for opportunity there. So with that, any questions, comments, leave them on the video, reach out to us directly. We're always happy to network and chat with new folks. Otherwise, have a great weekend. Try to learn something new, read a book, watch a podcast or a video or a podcast, and stay healthy. All right. Talk to everyone soon.